guys, Tara Ryan here, and today's tip from Tara is some big news from Fannie Mae changing a number of things specifically around condos, and you're going to want to hear all these. So, first of all, you've probably seen some announcements going out from other lenders and other places, and the tone has been great news, everything's wonderful. I'm here to tell you it's not quite like that. It's definitely more nuanced, some good, some bad. Let's dig into it so you know exactly how it impacts you and your buyers. First of all, the big wins, the good things. For condos, they got rid of the investor concentration limit. This only affected investor purchases most recently, so not many of you were running into this, but they just got rid of it altogether. Now, individual projects still may have thresholds for the max number of renters that they will allow in their complex. This doesn't change anything with that. This just changing this requirement that Fannie Mae had that if an investor was purchasing a condo, then the project couldn't have more than 50% condos. We are done with that. So good to know. That's gone. Here's another good one and a big one. Roof coverage. So insurance coverage across the board has always had to be replacement cost coverage. If there was destruction or damage, the insurance had to fully replace all the way back to the original high standards. What happened recently is insurance companies were like, this is getting really expensive, replacing all these roofs. So they might be a 15, 20-year roof, and we're having to put a brand new roof on it. And it's been causing a lot of issues with premiums getting excessively high. And so you started seeing actual cash value, ACV coverage, specifically for older roofs. And the insurance company saying, hey, we're not going to pay the full amount when it's a really old roof to begin with. We're going to do a prorated coverage. And for a while now, that has made it ineligible for Fannie Mae or Freddie Mac. This is condos and single family homes. Okay, so now they're saying they will allow actual cash value coverage only on roofs, but this is a big win. All other insurance needs to remain at replacement cost coverage, but for those homeowners associations and condos that have older roofs and they have the ACV coverage, this will help for sure. And here's the big one. The per unit deductible 5% limit is gone. Okay, so this is what you guys have been running into specifically with water deductibles was the most common culprit, where it was, let's say, $25,000 per unit, and when we did all our crazy math, that ended up being more than 5% of the property value when you multiplied it all out. Anyway, good news, you don't need to worry about any of that math because it's gone. They said you can have a per unit deductible up to $50,000, and then the homeowner will need to have individual coverage to cover that gap. That's not very expensive. We're talking tens of dollars difference. It's a wonderful solution and a huge win. This is the one where I agree with these other lenders that are saying, woohoo, right? We can cheer about this because there are a multitude of condo projects in Atlanta today that did not qualify because of this water deductible issue, and now they do. So great news. That is a big win. Now, got to get into the nuance, a little more less good stuff. Number one, they're getting rid of the limited review. If you didn't know, if you were doing 10% down or more for a primary residence, different rules for other things, and it doesn't matter because it's going away, but they would do a limited review where you only needed a condo questionnaire and the master insurance policy. But you didn't need the budget, right? You didn't need the covenants, all that other stuff. That did a couple of things for us. One, it was cheaper for the home buyer because there was less documents they were having to pay for from the HOA company. In addition, with a limited review, we don't ask for a budget, so now we don't see the reserves, right? So reserves historically have needed to be at 10% of the budget, and many projects don't meet that. If you didn't need a budget with a limited review, then you didn't have to deal with that question. It was very lenient and a nice workaround. That is gone. Full review for everybody, okay? So that's going to be a bit of an issue combined with, by the way, that getting rid of the limited review starts in August, okay? So that's coming soon. Then they're raising the reserves requirement. So instead of 10% of the budget, it's going to 15% of the budget. I'm a little curious if that's going to stick around, if there's going to be some pushback, and maybe the industry will make a change before the deadline. But that deadline is January 2027. Okay, so about a year away. That higher reserves requirement, I'm really nervous about it, because how is this information going to get to the HOAs? How are they going to have time this year to set their budget for 2027 so that it meets this guideline? And that's going to be higher HOA dues for everybody to allow for the money to come in to meet that reserve. So I'm hoping that changes, but I hate to be the bearer of bad news, but you need to know what's coming. And then lastly, sometimes we'll use a reserve study instead of that what used to be 10% number, now going to 15%. And now they're saying, hey, if you use a reserve study, we need the highest number that is in that reserve study, like their worst case scenario that they're projecting. That's what you have to manage to. Okay, so that stuff, let's not delve too much into it. Maybe it'll change. It's a little far in the future. Limited review is going away in August. That will impact some subset of borrowers, but not that many. For now, we've got a big win on the roof coverage and a huge win on that water deductible situation going away. So we will take the wins today, celebrate, and hope that helps us get a few more deals done this year. And I'll continue to keep you updated as further changes come. So guys, you can always count on us to dig in deep, give you the true, accurate information, and be here for you as you have individual questions. Give us a call. We'd love to help.